Welcome back to the program. The US Senate has confirmed Chris Wright as Trump's Secretary of Energy, who'll play a key role in carrying out the president's energy policies and expanding nuclear production. During his hearing overnight, he also reassured Democrats that he supports renewables such as wind and solar, and he plans to use resources within his $50 billion agency to address climate change. Meanwhile, Saudi Arabia and the United Arab Emirates are among the two locations being considered for the Trump-Putin summit, according to Reuters. US President Donald Trump saying he's ready to meet the Russian President Vladimir Putin to help end the war in Ukraine. Putin congratulating Trump on his election and previously said he's ready to discuss Ukraine and energy. However, some in Moscow are opposing the idea, citing the close ties both Arab nations have with the United States. And let's get you a check on oil prices now as well, dipping to a one-month low after the US paused tariffs on Mexico and Canada, America's two biggest foreign oil suppliers. President Trump announcing a 10% tariff on Canadian energy imports, which were due to take effect today. Also, OPEC and its allies agreed to stick to its plan to gradually raise output, despite pressure from Trump to lower prices and raise production. The group has also replaced Rystad and the EIA in its list of secondary sources used to monitor production. We also had some breaking news out of China earlier, which has also just announced what is going to be a significant pushback on the energy industry. Essentially, China hitting Trump where it hurts here, slapping the US with a 10% tariff on US crude oil, as well as a 15% tariff on US coal and liquefied natural gas. Let's bring in an expert now. Cornelia Meyer is with me. She's the CEO of Meyer Resources, live with us from Bern this morning. So Cornelia, you've just seen these new measures. China, as I mentioned, hitting Trump where it hurts. What's the impact for the energy industry in your view?
Well, you know, it's when I look at China, doesn't really import. If I look at crude, it didn't really import that much from America. And one of the things that Trump will be pushing for in terms of crude is that they're no longer importing the sanctioned Russian crude or soon to be under sanctioned and the sanctions Venezuelan crude. And that's something where they can have a bargaining point. So I think that they're beating him at his own game. When they're playing his own game, they're sort of raising the stakes, so to say, so they can have a thorough discussion on energy where some of this will be at.
Do you think that this could ultimately be inflationary if we saw it directly impacting the pricing structure of not just crude, but also LNG?
Absolutely, it will be inflationary. Although that is not that bad for China, who is right now a little bit in the deflationary mode. Right, the Chinese economy hasn't really recovered from COVID, and it hasn't really recovered from its burst real estate bubble, and despite stimulus measures. So it's not that bad. It will be much
Mm.
worse when Chinese exports are hit. Are hit with tariffs for the US, because that's where it really will have an inflationary push, and also with Europe. Europe has just come down from a real inflation phase, so it will also hit harder there. I'm not that worried about inflation in China at this point, but I'm worried about inflation in Europe and the US.
Yeah, indeed. And I think you make a really good point here, because Trump's entire economic mandate here is to lower inflation by decreasing the price of energy. That means drill, baby, drill, and increasing supply. These new China tariffs certainly complicate part of that strategy. But Cordelia, it's also interesting to assess the broader impact here. You and I were both on an OPEC call last night. OPEC, of course, watching this closely, and Saudi Arabia and the OPEC group have not taken Trump's bait yet or really listened to his call to increase production. So I want your take on this as well. What was your takeaway from last night's JMMC meeting, and how do you think Saudi Arabia and the OPEC group is ultimately going to respond to what is now a trade and energy war playing out between the US and China?
Well, I think what we can see is that OPEC is playing the game that they've always played. They say we are not about price, we're about supplying markets adequately. And that's what they're doing. And they didn't have to act because as of April 1st, they will release, incrementally over between April 1 and of this year to the end of next year, 2.2 million barrels of, they will burst 2.2 million barrels of voluntary production cuts. So there is more oil coming. And, there's plenty spare capacity around in the UAE, in Saudi Arabia, that if it's really needed, they can release it. One thing I would like to add, and I'm sure the incoming Secretary of Energy understands very well, if it's drill baby drill, the U.S. needs a certain oil price of, I guess, around $70, according to my model, in order for banks to actually finance expansion in the shale space.
Indeed. So as you think about this more deeply, though, as we head into 2025, could this be the start of a new era where energy is weaponized in global trade disputes? That appears to be what is playing out right now.
Yes, it is. But I could actually say it has been weaponized. When we started to have sanctions on Iran with the last Trump administration, the sanctions on Russia, there is already some degree of sort of mini weaponization towards certain geographies. But I think it will be a broader, sort of a bigger weapon hitting us. And the thing is, with these trade wars, it's sort of the art of the deal type. Well, let me raise the stakes in order to negotiate. That will always, bring about volatility. Look what the oil prices have done. They were at about $78, nearly above $80 on the 15th of January, and they've come down. It was incredible volatility. Will there be tariffs? Will there not be tariffs? So what we will see is a lot of volatility, and that will really concern OPEC.
Indeed. And Cornelia, just updating our viewers on what prices are doing right now in reaction to this breaking news. We see here WTI down 1.6% at 71.98. Brent crude at 75.20, also down 1%. So the immediate reaction has been a step change to the downside here. Crude oil prices pulling back as we see this tit-for-tat tariff reaction between the United States and China. And of course, the flagfall on what could be a more prolonged trade dispute between these two powers, indeed the world's largest economy. So Cornelia, when you think about this, where do you expect this to go next? And what is Trump's next move as well? It seems as if China has done a pretty good job here of attempting to play Trump at his own game.
Yes, I think so. And he will negotiate. And for Trump with China, I think it's less about energy. It's a lot about manufacturing and the goods coming in. And actually, Mexico is part of that game because China has actually put a lot of its quite a bit of its manufacturing capability into Mexico in order to service the U.S. market. So it's really quite intricate. But the game with China, I guess, energy is not really that much of a thing. It will be manufacturing, and how they will do that, and the Chinese will have to give in on the sanctioned barrels. The other thing is, I think for the Europeans, it will really be about energy because Trump wants to sell his LNG into Europe.
Indeed. Cornelia, I wish we had more time. We'll have to leave it there, but we have a lot of news to get through. I think we'll have to continue the conversation another time. That's Cornelia Meyer there of Meyer Resources. Always appreciate the chat. Thanks again. Up next on the program, UBS set to report Q4 earnings. We're going to break those numbers down for you in just a few minutes.